welcome to Macros with Mythili, our weekly program where we take a hard look at all the major macroeconomic developments in India and overseas. In this episode, we're going to take a hard look at the first Gyan Sangam, or confluence of knowledge, organized by the Modi government to energize the banking sector, especially public sector banks. Over the years, we've had a number of expert committees go into the issue of banking reform, and there's no dearth of blueprints either. So what does a Gyan Sangam hope to achieve? After all, the problem is known, as also the answer. What is lacking really is a political will to stop using public sector banks to achieve socio-political ends. Will the Sangam change that? To discuss this and other issues in the banking arena threadbare, we have with us a panel that's guaranteed to give you a 360-degree perspective. One practitioner, S Vishvanathan, ex-MD, State Bank of India, one academic, T.T. Mohan from IIM Ahmedabad, who incidentally was one of the Gyanis who held forth at the Gyan Sangam, and one bureaucrat, Mr. D.K. Mittal, former Secretary Financial Services, Government of India. Welcome to the show. But before we start, I'd like to make a disclaimer. I started my career in the State Bank of India before moving to the Reserve Bank of India. With that, let's move on to the discussion. Mr. Mittal, as somebody who was, from the government side, there's always been this argument that there's too much interference by government, etc., in the functioning of public sector banks. Where do you stand on that? Is it justified, and is that a fair assumption also?
Interference would be of two categories. One, in terms of operating side, I would say it is absolutely not there. If there's a recommendation which goes from the government to say that please look into that matter, it does not mean that somebody is asking them to do it. But if there are certain banks doing it, sanctioning it, it's more for their own interest rather than from the direction from the government. But if you say on the management side, yes, I'll admit there's interference by way of, because selections are with the government, appointments are, postings are with the government, and number of HR issues are with the government. So that process, I'll say, that's certainly in the control of the government. But the operating side, banks have absolutely full freedom. There is no issue that that they look to government for saying that sanction this case or not to say. Now, when finance minister reviews it, and he generally talks of increasing lending, it does not mean you lend to projects which are not good, which are not completed in terms of the due diligence part, or which are not fully developed. So it is never the intention of the finance minister or the ministry to say that you finance such projects which are not competent to be financed.
But in the past, the finance minister, the earlier finance minister, and even now to some extent the present finance minister has called on banks to lower their rates of interest. Would that not be an interference in their commercial judgment?
Yes, it would be a call from the finance minister to say that please look at it, whether you can lower the interest rate or not. But then banks will have to look at the interest of both the depositors and the borrowers and their own shareholders. So if they look at the three interests, they are fully competent to say to the risk committee and say that sorry, we can't do, or the LM committee that sorry, we can't do anything with the rates. There's nothing more we can do than what it is today. There's no specific direction ever issued by the government to say that reduce interest rates, or informally told banks were asked to reduce their interest rates. It's never the case. Let any chairman say, past or present, that when somebody asks them, please sanction this case or lower the interest rate. That's not the case at all.
Vishwanath, you've been at the receiving end. Now, I won't ask. Now, perhaps I can ask you to stick your neck out like the former the State Bank of India chairman Pradeep Chaudhary said. Government must be very clear that whether you want to use banks, public sector banks, in the task of nation building, or do you want them to function as commercial entities? Mind you, he couldn't have said this when he was chairman of State Bank of India. So how does it feel now that you're out of State Bank? Were there at any point of time subtle or not so subtle pressures on banks to do what government bid them to do?
Well, like Mr. Mittal was just saying, from the policy perspective, from the perspective of what the government wants pushed as its agenda, there have been instances where certain things have been pushed. For example, financial inclusion is one, and priority sector lending is another. Then there are many other issues which are like this. Some of them are for all banks, some of them are pushed only for public sector banks. Now, that is one part. But has that really changed the way we work? Did we feel pressured all the time about everything that was happening? I really don't think so. There are directions, some of which can be implemented, and some of which we try to implement because we are told to. But if we can, we do it. If we can't, we just can't do it. And particularly about your interest rate pushes that you were talking about, there have been instances when some of these meetings with the finance minister have led to lowering or raising of interest rates, as the case might have been. But it is not always that he said it and it happened. I mean, there is an independent view, and there have been numerous instances when maybe the finance minister or somebody else has said, he would like the interest rates at a different level, and it has not happened. So really speaking, phone calls may come, but whether the phone calls are listened to and acted upon as such It's not necessary that it has always been done.
But how easy is it for the people at the helm of public sector banks to turn around a request, quote unquote, from the finance ministry or the minister? How easy is it? Can you, because after all, you owe your seat. The job is owed to the finance minister, the finance ministry. The appointment is done through the finance ministry.
Yeah, but once an appointment is done, you're there for 2 years or 3 years in any case. So really speaking, I don't think that is the way it's viewed out. Surely, when your owner tells you that, I want a certain way of certain things pushed, one will have to hear that out and one will have to examine, one will have to look at it. But if it is not viable, if it cannot be done, at various levels, I've personally not necessarily done what has been asked to be done. For example, when I was a CGM in Northeast, for example, we used to get all kinds of pressures from local level functionaries. And we would do it, we would not do it. And many of those things are not necessarily something which is, illegal or something which cannot be done. They push their agenda, and many times when we explain to them we can't do it, they go away. But this is not to say that nothing comes.
Mm-hmm. So it's a question of how much you're able to resist, as it were.
Absolutely, yeah. It's how much, I wouldn't use the word resist. How well you can articulate your point of view to the system.
Okay, so let's turn to TTR. TTR, you as an independent observer, what is your sense? Has there been excessive, quote-unquote, interference from the finance ministry in the functioning of public sector banks? Or is it limited to the interest as the owner?
Well, I think, Mythili, we need to be clear about a couple of things. As you know, the government is the promoter and the majority shareholder in public sector banks. And just as promoters of private industrial houses will make themselves heard when it comes to the running of their enterprises, so also it's appropriate and legitimate for the government to make itself heard. Now, you can use the word interference, you can call it intervention, you can call it whatever you like, but I think we have to accept this reality that the government will have an opinion on various matters relating to the functioning of the banks, public sector banks. The second thing I think you need to be clear about is that in the public sector banks, the social orientation will never completely go away. So it may be there in greater degree or lesser degree, but it's bound to be present. So you can't have an expectation, for instance, that a public sector bank will decide it will not be in infrastructure, it will not be in small and medium enterprises, because that is not conducive to a profit orientation. So I don't think a public sector bank really can take that position, whereas a private sector bank can do that. They can steer clear of whole segments if they find that that is not consistent with maximization of profit. So I think these are realities we have to accept. But having said that, let me also say that these kinds of interventions do not necessarily take away from the performance of the public sector bank. I mean, they are not of an order of magnitude which will impinge materially on the commercial performance of public sector banks. So it is something which can be managed in a way which is consistent with commercial performance.
Okay, but I'm afraid on that note, let us slip into a very short break. We'll come back to the issue of ownership and management after the break. But please do stay with us. Welcome back. You're watching Macros with Mythili, and we're discussing the Gyan Sangam on banking reform at Pune recently. Vishwanath, if I may ask you, TTR mentioned the issue of ownership and management. Can ownership in public sector banks be divorced from management, where the government owns a stake, but the management is left purely to professional managers? Or is that too idealistic a situation?
No, not at all. When Mr. Raman was talking about private enterprises, there's a very clear owner, and many times we don't even know who the owner is, who is the operating owner from behind the scenes. So he has allowed the management to function. So really speaking, management is completely different and ownership is completely different if the owner wants it to be so. Now, if the owner does not want it to be so, then he calls upon the management to do what he wants done. And if the management is pliant enough, it does what it wants. So the issue really is, how will you separate ownership from management as a method of working, and what all do we need to do that? That, I think, is the real primary issue that we need to discuss. It is not to say that the public sector bank's management is completely, it's like a department of financial services or something like that. It is not like that. But even then, do we need to do more? Surely we do.
Okay. Mr. Mittal, so Vishwanath used a very interesting term. He said it's a question of, does the owner wish to have management done professionally? Now, assuming that the government does wish to have management run professionally and wants to limit its interest to just ownership, how do you look at the idea of a banking holding company structure? Is it feasible? Would government be inclined to go that way?
See, two parts. Banking holding company, my personal view would be that this is the right thing to look at the functional autonomy to public sector banks. It will take away many of the issues which are there when they are being directly dealt by the government. Now, a lot of work has been done on that, and there were some examples available, Singapore and China, where this kind of work has been done. So I think that's the right move, rather than creating a holding company for each bank. Now, coming to one issue which Mr. Vishwanathan mentioned, see, ownership and management are two very frankly different things. We can look at Indonesian banks, which used to be almost sick banks, but they have been turned around by giving freedom, operational freedom to all the banks. And they are darling today of the stock market there. So it is possible to convert our own public sector banks into very vibrant enterprise. There is no issue on that. The second part is whether it is feasible or not. I think there is an issue of understanding. Because the problem which is being perhaps being raised is that this company will become too powerful. If we have all public sector banks which control about 70% of the total country's banking system, they come under one umbrella. But there are ways to control that issue also. So I think the way going forward, if we do that, then we address the issue of management, we address the issue of capital adequacy for these public sector banks, and we also address the issue of tomorrow if we want to merge them, then that's the method to do that under that umbrella company only.
TTR, does that sound like an ideal solution for you? A bank holding company holding the shares of all the public sector banks? Does it give you sufficient arm's length distance between government and the bank management?
No, I don't think so at all. But first, let me make a very basic point. I think I'd like to debunk the notion that there is a link between ownership and performance. And this conclusion is being made based on what has happened in the last 2-3 years, which is a very particularly stress period for both the economy and for the banking sector. But if you look at what happened 15 years before that, say 1994 to about 2008 or 2009, we saw a consistent improvement in performance of public sector banks, and there's a wide body of academic research which points to a trend towards convergence in performance between public sector and private sector banks. So you can't seriously argue that there's something fundamentally wrong with the public sector character of banks which comes in the way of performance, because the long run performance doesn't point to that. Now, so far as the bank holding company is concerned, it depends on what your objective is. If the intention is only to have a mechanism for raising capital, then there's no harm. So you can have a bank-specific holding company, you can have a holding company for 4 or 5 banks, you can perhaps even have a holding company for 10 or 15 or more banks. But if the idea in creating a bank holding company is to change governance in some way, then I think it's a terribly bad idea. One reason I would be opposed to a bank holding company for all the banks together, that is an umbrella kind of banking holding company, is that it has the potential to create serious systemic risk. You have a set of professionals running the bank holding company who are presiding over the destinies of the entire public sector banking system, and I don't think that kind of concentration of power or responsibility is desirable at all. And I also think that if the government is intent to give autonomy to banks, they can jolly well do that within the existing framework. You don't have to create a bank governance, holding company in order to do that. And by the same token, if the government doesn't wish to distance itself from management, then the creation of a bank holding company may not contribute much, because the government will always find ways in which it can manage the holding company itself, however eminent the professionals who are running it. So the intention of the government is what matters. And if the government is fairly clear that the banks need to be run professionally and along commercial lines, they can do that within the existing framework. I don't think that you need to interpose a holding company in order to achieve those objectives.
Absolutely. So it's basically political will. Does the government wish to do that? But if I can ask you a little further on a question that you raised about how public sector banks' performance dipped post-2008. What was that because of? If it was not because of ownership, was it because they were stepping up to the neat task of nation building and lent to infrastructure when they shouldn't have? And is that the reason, if ownership is not?
Yes. So, in the last few years, the public sector banking performance has suffered mainly on account of exposure to infrastructure and related areas. And in infrastructure, we have had a number of problems which are not entirely economic in nature. So the problems in infrastructure have to do with, major institutional failings. The public-private partnership model, which nobody has understood properly, and, banks have not been able to come to grips with that model. Then you had problems of land clearance, environmental clearance. You've had adverse court judgments. So you can't say that the problems have arisen because of, faulty appraisal or because, the banking competence was not there. There are a number of extraneous factors which have impacted the performance of the infrastructure sector and which have told on public sector banking performance, which is not to say that there is no room for improvement in the management of public sector banks or that the culture doesn't need to improve and so on. But you really can't make out a case saying that, the banking sector woes are entirely related to ownership or lack of, managerial competence. We've had a very exceptional situation there, and the government has its work cut out in sort of addressing the issues related to infrastructure sector so that, the banking sector can revive. The problem cannot be solved by merely addressing, banking sector related issues. There are problems related to the real sector which need to be tackled head on so that, the banking sector starts reviving.
Okay, so the problems go much beyond the banking sector and public sector banks in particular. But on that note, I'm afraid we have to slip into another very short break. But please do stay with us. We'll be back very soon. Welcome back. You're watching Macros with Mythili, and we're discussing the Gyan Sangam held in Pune to discuss banking sector reforms. Vishwanath, if I may ask you again, turn to you and ask you, we've had so many, blueprints and so many expert committees going into the issue of banking sector reform. There's no dearth of suggestions. Did we really need another Gyan Sangam? What is it going to achieve?
No, Gyan Sangam is a retreat where you're exchanging views, you're updating your recommendations or your thought processes, and you're meeting up and talking to each other and coming up with solutions as would be required today, and addressing issues which may have arisen between last time and now. So it's one more retreat. I don't think we should look at it as anything more than that, except that this happens to be a little more because this is possibly the new government's first such big meet with the banking chief. The Prime Minister came, etc., etc. I would look at it like that, and I really don't think the issues that have been posed in this Gyan Sangam are any different from what have already been thought about, etc., except that they are updated to the current level in terms of the discussions that appear in the, which have appeared in the press.
Mr. Mittal, Vishwanathan again touched upon something that is very true of the situation today, that, these problems are not new. They've been there in the past. NPAs with public sector banks soon after the East Asian crisis, then the problem of HR, problem of compensation, problem of accountability. And we've had so many recommendations. We've had 2 Narasimham committee reports. We've had the present governor himself with a report. So why do we need any more reports? In fact, the earlier finance minister, the present MOS state finance, his father had said, let's bring down the government stake to 33% as a way of solving these problems. So why is government not acting? Why are we going on, beating around the bush and not coming to a decision?
You have a point, but I'll go along what Vishwanathan has said. At least the top brass of the country's governance, they are having a direct interaction with the banks. And that again together with the RBI. I think that's very significant. It's very significant. Sitting together, a 2 days meeting, and then understanding from all these recommendations which have emanated so far, what to be done. And again, as Mr. Vishwanathan has said, updating all issues till this situation what is today. So I think it's a very good step. But I would agree with you that this should result into an action plan.
And do you think the government is prepared to kind of lower its stake to 51%? They say that, but will they do it?
But they already committed to do 52%, so 52 to 51 is hardly any issue in that. They can do up to 51%. You give me one opportunity to speak on what Mr. Mohan has said. I slightly disagree with him. See, the public sector banks are at, they have committed a fault or they committed an error in lending to infrastructure projects which were ill-prepared. The problem is banks have lent merrily for last 8 years to such projects which are not equipped to take disbursement. And in the process, many of the promoters have siphoned out this money by various, contracts, related party transactions, and this same has been recycled as equity, and it is where the skin is of the banks and not of the promoters. So that's, I think, is a big challenge. So I'll disagree with Mr. Mohan has said.
Okay.
That's a factual situation.
Sure, we'll ask TTR to defend himself. TTR, what do you have to say to that, number one? And number two, how hopeful are you that we're not going to end up with yet another blueprint which gathers dust somewhere in the finance ministry?
Well, let me, Mr. Mittal is entitled to his point of view, and, I'm not saying that bankers should be fully absolved of responsibility for the exposure they've taken to infrastructure. So at some banks, especially the weaker banks, there have been some mistakes. But, the nature of the beast is such that, the problems could not have been fully anticipated 4 or 5 years ago. It's all very well to talk about these problems with the benefit of hindsight. But telling about the Gyan Sangam itself, I was pleasantly surprised at how constructive and intense the discussions were. Even if some of them are taken on board and implemented, I think it make a sea change to the functioning of public sector banks. And the discussions themselves are very, intelligently structured. We were not talking philosophy at all, so I can assure Mr. Mittal on that count. So there were no philosophical discussions. They were all action points. What are the 8 or 10 things that can be done in a particular area? And I think, the discussions were extremely meaningful. I'm talking only about my group. I have no idea what happened in the other groups.
So yes, can I just interrupt you and ask you, if you were to single out 2 or 3 action points that, really have top priority, what would those be?
Well, first thing I would say is you have to improve the risk management practices in the banking, in public sector banks. And the starting point is to have a distinctive risk management function, which a chief risk officer who has a certain degree of independence, and any differences with the chairman and managing director must be resolved by reference to the board. This is one of the recommendations
that is
you've
one.
made.
Your second?
And then, yes, and the second thing, for large exposures, and you can define the threshold, say 500 crores or 1,000 crores. In the present environment, we should revert to consortium financing, because that is when banks have a comprehensive picture of the cash flows, the security situation, and so on. So that's another thing that needs to be done. And the third thing which needs to be addressed very urgently, which is far more important than creating a bank investment company or a holding company, is strengthening the functioning of bank boards, and in particular strengthening the mechanism of independent directors. I mean, there's absolutely